Good day, everyone. Um, just a very little trade idea here that I want to share, like a scalping. Now, one of the things I want to highlight here is when you are expecting a retracement, what should you see, and that will help you anticipate the beginning of that retracement. And how do you trade the retracement, especially when you are having a bearish market, just as we have here? GBUSD has been pulling down after it hits this higher time frame fair value gap. It's traded into this fair value gap again, then rolled down. It came into this larger fair value gap here, into this other block, and then what happened again? It still rolled down again. So at this point, one will be expecting a retracement. This retracement up. How do I trade it? These are counter trends idea that you want to really learn how to trade. Now, one of the ways by which you can begin to anticipate retracement is by the use of old lows. When price enter old lows, one of the things they want to do is retrace. Now, this is not every time, but it is reasonable to expect it when they are impulsive move downward. And then when you see old lows, you have to be very careful, because as at those points, price may retrace a little before continuing lower. So you want to take advantage of that knowledge to find setups that will help you take some little pips out of the marketplace. Now, this is just 4 hours time frame, and if you check the daily, let's go to the daily, you would really see that this market has been in a bearish mode. It has been pouring down seriously. It has been on a bearish mode, and we can see quite okay that 2 days before this actual day here, price reacted from this fair value gap downwards, and then there was a rebalancing yesterday. It came and hit this other block here, and there was like immediate rebalancing, hit it and then came down. So today, what did price do? Price had to enter into this old low here, 22 of November. That was on Friday, some weeks back. So price entered into it and then reject higher. So you want to take advantage of this kind of setup. So how do I anticipate it? Price has been in a bearish mode, and then there is an old low. Capitalizing on that, after an impulsive move have happened, this old low here has been taken out by price action downward. Then in this kind of scenario, you can actually see that there's formation of lower high, lower low, lower high, lower low. So in the context of this formation of lower high and lower low here, there must be a retracement. Do we understand? So it is at this point you want to be looking for opportunity to trade it. And one of the ways by which you should expect that retracement is by the use of old lows at the left hand side here. Old lows. So price enters into the old low. One of your confirmatory things too that will help you know that price is actually going to retrace into a specific level, probably another block or a fair value gap, is after price has hit the old low. I've been mentioning this before. Did it invalidate fair value gaps? If it does that, that's a nice one. And just as we have seen here, this is a 4-hour time frame. A nearby fair value gap after price, before price hit the old low, was invalidated. Look at it here. And I use my blue rectangle to shade out. So price hits the old low, came up, impulsive price action higher, invalidate this fair value gap that should send price higher further. So that's a confirmation for me that this market is about to retrace. So then I'll move on to 1-hour time frame. 1-hour time frame like this. What can you see? I'm seeing the old low that I showed us earlier. This is the 4 hours inversion fair value gap formed as a result of this impulsive move higher. And then another thing I want to point us here is the 1-hour fair value gap formed. Can we see that? 1-hour fair value gap formed. Very important. So I'm going to give this another color. I'm going to give that let me give this another color, so to say, so that we can differentiate between the 1-hour fair value gap and the other fair value gaps. Now that's the 1-hour fair value gap in something like orange, while the blue one is the 4-hour fair value gap. So price in fact traded into the 4 hours inversion fair value gap, the 1-hour fair value gap. Now I want to make the 1-hour fair value gap visible below. Okay, let's go to 15 minutes now to see. So all of these things ICT have taught them. So can we see now? Price has been in a downtrend. Price has gone higher, broke lower here, came into this fair value gap here, broke lower, came here into this other block, broke lower again. This is the last lower high formed by price before entering into the old low on the 4 hours on a daily time frame. So what did you see? Impulsive price movement higher, broke this last lower high. According to ICT, that's break of market structure, which signifies a change, a short-term change of delivery of price. There's a change of delivery of price for a short term. So what happened? Price reversed, came into the 4 hours inversion fair value gap, came into the 1-hour fair value gap. There is a little 15 minutes fair value gap here. Price retrace into it. So if I should take this trade here, my stop loss is going to be at this old low here. Now we'll see. And in fact, price began to gyrate higher. Price continued to gyrate higher. So this kind of model is a retracement actually. It's a retracement. And you want to identify a hold low. In some other cases, there could be a fair value gap. The price will just enter and then reverse like this for a retracement. But in this case today, it is an old low. And opposing it is a fair value gap. And we are expecting a retracement in an ongoing bearish move. Can you see trade ideas coming together to make sense? These are principles of trading that you want to know, so that when you are in the marketplace, these things will begin to speak to you, and then you internalize them and use them for your trading. Very, very important. You can see. Let me lower these stuffs here. You can just see it faintly. So can you see? So the first thing, the market has been in a downtrend. Price has been in a downtrend, and on the 4 hours, price has been making higher highs and higher lows. Can you see that? Price came to this higher time frame higher time frame fair value gap, broke market structure, market retraced into this place, broke this structure here, it retraced into this other block and fair value gap, broke lower, broke out this low, and then price afterwards, after breaking lower, it entered into this fair value, this old low. So at this point, you should be expecting that, okay, after price has entered into this old low, there should be a retracement. This is what I'm telling you. Expect it. So in an ongoing, already on moving fair value market trend, market has been trending lower, forming higher high and higher lows, higher and higher lows. So you could actually trade this retracement. This is on a Friday. This kind of trade is good for a Friday. You look for it intraday, probably the New York or the London key zone, and then you just take a nice trade from there. So it's a whole lot simple trade that you can anticipate on Fridays like this. Not so much movement, and it delivers good amount of pips. Good amount of pips. So trade ideas, market has been forming higher highs, higher low. At old lows, you should expect a retracement, you should expect a reversal, and that is coming into this one. How do I free my entry? What you are looking for is inversion fair value gap on 4 hours. Once that is done, check 1 hour. Is there a fair value gap there after the break of the fair value gap? If that's the case, go to 15 minutes. You are looking for a break of market structure on the 15 minutes. That's on the micro structure there. Once you see 15 minutes break of market structure, you want to look for a fair value gap or an order block. Once that is done, poof, that's your trade. All these things should come together and then help you take an informed trade. So it's a whole lot of stuff here, and I hope you find value in it till you come my way next time. Bye.